Good morning, everyone. I'm Evan Lazarus, Chief Knowledge Officer here at T3Live.com, filling in for Scott, who is out today. Usually on Friday, we do a little bit of a lax morning call, but I have a lot to cover today, so pay attention. We're going to go through a lot of charts. We're going to look at some indexes. We're going to go through some trade ideas, and we're going to sort of get a broad stroke of what's happening in this market. Yesterday was a day to take notice. The market got shook real hard. They shook the tree as hard as they could. And I think I caught a lot of traders by surprise. I know personally speaking, I didn't, as much as I believe that we were in an area where there was resistance, I didn't think the market would find rejection the way it did yesterday. And yesterday was a day, like I said, that we need to keep an eye on, because a day like yesterday is a day that could potentially lead to a lot more downside. And we're going to watch the complexion of the market and how it hangs in today and possibly into early next week. Before we can, potentially, make a call that this is a pullback or this is something that is going to lead to lower prices. Let's flip over to the charts here, and I want to start with the XII. Now, this is the institutional index, and it measures the core holdings of the largest institutions. So what it really is essentially doing is basically telling us what smart money is doing. So I like to look at the XII in addition to both the spiders, and the S&Ps and the Dow and some of the general indexes, because it really is, I think, the best reflection. We did trade back into resistance. You can see this little uptrend line. We broke here back in early May. We tested it and we failed pretty hard, snapping back into what is this resistance level and seeing some aggressive selling. So obviously it's going to mirror the markets, but again, just a different way to see things and something that I pay attention to, that I often share with traders. Keep an eye on the XII. Yesterday, again, a day to take notice, back into this area of prior support. And I think, after you see large directional candlesticks with big power and big impulse, what we like to see thereafter is, how they retrace or how they consolidate. Now, it's always possible we can, break down further today, although I don't think that would be, what's expected. But anything in this market, essentially can happen. So we'll be on alert here. I think a 1 to 2 day consolidation here, even a 1 day consolidation, could lead to more selling early next week. Moving over to the S&Ps, as I mentioned, let's look at the SPX. We talked about this yesterday in the recap, the StockTwits recap that we did, Scott and I. The 618, which is the golden ratio, that was the retracement. We look at prior highs, our April highs into our May, June lows. We got a basically a 2-week retracement back to the 618, and then that level just utterly flexing its muscle and rejecting price and sending us back down, eliminating the prior 3, 4, 5 days of trading to the upside in basically 1 day. So that's power, and like I said, this is something we need to pay attention to. If you are a shorter term trader, it's time to go down to some of your smaller time frames. This is a 60-minute look, or actually a 55-minute look, as I'm I actually use a 55-minute chart, not a 60-minute chart. But this was yesterday's rejection. I think you need to watch for a 3 to 5 bar snapback here. That could be, that could come in the form of some consolidating price early this morning. We could trade lower. We could trade back into, this area of support down here around 1310 in the S&Ps before potentially bouncing. So, it's a tough call right here. Back into an area where you could justify, looking for that cute little, snapback trade. But again, that's going to be probably a hard money trade, and I think we are gapping up a little bit this morning. So what I'm going to do is I'm going to look to sell into these declining averages, specifically my 21 EMA here on my hourly, to actually engage if and when that setup does occur. And that's something that I recommend, tuning into the VTF for, because that's a real-time intraday actionable type of setup. And let's move on to gold. Yeah, again, something Scott and I covered yesterday. Not the GLDs, but gold itself here. Into resistance in this 95. Watch this level. This is now a more significant area of resistance. You can see this was the gap. Retested it, tailed down yesterday. So I would watch this as a short, potentially for lower prices on any short-term strength into this resistance area. And the GLDs breaking down from their little, bear flag pattern in here, over the last 2 days. And these look like, they want to go lower. This is GLD. You can see we have that area of more significant support down here around 148. So I think traders are going to look for a move down to that area, retest it again. And I suspect after 1, 2, 3, 4 attempts to hold, this fifth time might be sort of the dagger. So keep an eye on the GLDs here. And we talked about the weekly chart yesterday. And we covered gold in depth here. So if you're not familiar with sort of what we're looking at here, go back to yesterday's recap, Thursday's daily Q&A recap, and you can see where we talked about the GLDs. Moving on to some trade ideas. Apple, something that looks very interesting to me, and I know that there's a lot of people that like this stock and like to trade this stock and believe in the company, and that's all good and well, but we have to respect, price. And this is a weekly chart. You can see the weekly. Now, what is interesting here is that this, to me, looks like it has the earmarks of what could be a little bit of a bear flag developing. You can see that, large move down on the weekly, about a 50% retracement here. You can look at highs to lows. And this is something I would keep an eye on. Now, this is a weekly chart. And again, you can see right into that 50% retracement tailing down yesterday. And again, this is a weekly, so it does, talk about a larger sample size of time, and it does take longer to play out. Every candlestick represents 1 week of time, but it does speak to me that this stock could be setting up for lower prices. On the daily, again, you want to see that same mirror. Looks like a little bit of a bear wedge developing here, and I am going to keep an eye on this lower trend line here. And if we break through that with some volume comes up, this could, we could be going lower here in this trade. So keep an eye. It's tried to get through this 588, 590 level a few times. We haven't seen any success. And moreover than that, with upside or even downside, you want to see volume. Volume confirms. And you want, not only do stocks have to break out, but you want to see them break out on larger than average volume. We really can't, we haven't seen that here. So Apple's something, again, for the watch list. For those that have participated in the Active Trader program, you know the significance of having a good watch list. And by me going through these trade ideas, I'm trying to just, again, give out some information. Maybe some of them work, maybe some of them don't, but keep them on your radar, so that you understand what's happening and how to essentially position yourself depending on what type of trader you are. So that's Apple. Moving on to the market, I know I always get a lot of feedback. Well, I can't short because I traded an IRA, or, I don't like to short. So there are some instruments out there, that are inverse to the market, so you can essentially, buy them as the market goes down. This is SH. This is the short S&P 500, and you can see, taking out this little, micro downtrend line yesterday. Again, these types of ETFs, I don't recommend for anybody other than just active short-term traders. Traders that have shorter durations of time, a couple of days to even a few weeks. But just some, trade ideas. Also, here's the SDS, very similar. This is a leveraged ultra short to the S&Ps, and you can see again taking out this little downtrend that it's been in, and that big down day yesterday causes that big move up. So these are correlated to the indexes if you're looking to short. The RWM is the Russell. It's the inverse to the Russell. It's the short Russell. All right. So keep an eye on that one as well. The TZA, again, all very similar looking here. Again, these are just watch list trade ideas for those looking for some longs. If the market does, continue lower, we do see some continued selling over the next, couple of days, couple of weeks. You do have instruments you can go to that you can actually put money to work long and benefit from the selling in the market. So some good, again, just keep an eye on these. These are not necessarily actionable yet, but worth watching because you need, like I said, you need to have a good watch list, to profit from what's happening. The FAZs, another example here. Again, I'm just sort of going through some of these inverse leveraged ETFs. FAZs are financial related, so they will move inverse to some of the banks. Let's talk about those banks. I'm going to start with JP Morgan. JP Morgan trading back to basically, this gap, the top of where this gap down started, and seeing some selling yesterday. I would keep an eye on this rising trend line. If it can get through this rising trend line, you could see some more selling in JP Morgan. And there's a lot of news here. It's very headline driven, especially with some of the downgrades yesterday in all the banks. These are going to probably be actionable for some time. So keep an eye on that setup as well. Citigroup. Somebody asked about this yesterday in the Stock Twits daily recap. Citigroup looks like it's going to try and break this short-term bounce that it's been in to the downside. COF, Capital One. Again, very similar type of things. These are just, again, actionable trade ideas for those looking for, to build a little bit more diverse of a watch list. I think good traders need to have, stocks that you follow, both long and short, so you can take advantage, like I said, of what the market gives you. And, building a good watch list is an essential part of, being a profitable participant in the marketplace. What else do I have on my list? Some of the home builders, DHI. We talked about this yesterday in the recap, so again, you can always review. But keep an eye on DHI. This to me looks like a little bit of an ABC correction, and you could see some selling here in more selling in the home builders and Toll Brothers as well. All right, Toll Brothers. Just some bear flags that look like they're building here. So keep an eye, as these are all good short, actionable short watch lists. I know when markets tend to trade lower, a lot of traders throw their hands in there and say, I don't know what to do. I don't know how to make money short. Well, this is essentially us trying to provide you some, again, just some ideas to help you navigate should the market potentially give us another curveball into next week. Honeywell's an interesting looking chart. Big stick down yesterday. Look at the volume in Honeywell. So this is something that tells me there's committed selling, and I would keep an eye on that. Obviously, if it breaks this little pivot down here, you could see a move right back to the lows, into the low 50s. So Honeywell on the radar as well. Macy's undercutting, or sitting at support, right around 35. You have that level of support, a little bit of a descending triangle type pattern. Lower highs, again, lower high, lower high, lower high. Big move down. I wouldn't be shorting on the lows. You might see a little 1 to 2 day correction here, but Macy's definitely on the radars. If it takes out 34.50, 35 area, we could see a trade back to even down into the low 30s. So something to watch there in the retail sector. And lastly, let's look at Priceline just to sort of round out. High beta, Priceline into resistance. All right, you can see this level. This is where, was support right here. It broke. It retested. Retested again and starting to come down. So keep an eye on this, support resistance levels. It could be an actionable area for a low risk type of short, as the stock, couldn't really retrace that deep. You have these twin peaks up here, or double top, back from, April, May, that 775 level. So this is something that looks like it could potentially start to work its way lower and unwind itself. In terms of retracements, didn't really even get to the 50%, so not showing a whole lot of relative strength there, just more of a correction. And I think potentially, again, Priceline's a little bit of a wild animal in terms of the way it moves, but the levels are the levels and the prices are the prices. So there are ways to profit. Keep an eye on this short-term trend line, as it could spell a break or a change in direction here. So putting it all together, a lot of short ideas to give out, just for the watch list, not necessarily actionable today. Things to keep an eye on, patterns to watch, so that if the market does break lower, and yesterday actually does have some follow through, you can definitely position yourself in certain areas, whether it's a lower risk home builder type of trade or a higher risk trade like a Priceline. There's going to be opportunity, and as active traders, you have to think like an opportunist. Our job is to evaluate structure. Our job is to have patience. Our job is to have a sound watch list. Our job is to have a plan. Our job is to understand when it's the right time to be actionable. And that's really, in essence, the core of what makes somebody, I think, a profitable, or a trader that has longevity, as I always say. Show me a trader that has longevity, I'm probably going to show you a profitable trader. So it's about building that plan, and that plan has to be well-rounded. For a long time, Scott has done nothing but give out trade ideas to the long side. I think in this market where you have this volatility is paramount, you need to have a little bit of both. Last week we talked about some of the dollar stocks, Dollar Tree, Family Dollar, Dollar General, Expedia, some stocks that really gave us some good long trades. Now it's time to, maybe move a little into the short camp after yesterday and just put together a plan. You can say, okay, if this happens, then I know I'm going to want to watch A, B, C, and D. And that's, I think, really, what could be a very, very helpful approach to trading this market. If shorting is not your thing and the market goes down, cash is also a position. Let me stress that as well. You don't necessarily, have to do anything. That's the beauty of being a trader. If it's not your tape and something you don't feel comfortable with in terms of risk, step aside. There will be another day. As always, a planned trader is a profitable trader, and I will talk to you on the virtual trading floor. Have a great weekend, everybody.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.